promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Trading options involves risk. Visit the OP website, www.optionsclearing.com, to read characteristics and risks of standardized options. PSW provides education and training services that are meant to teach you the risks and potential rewards of trading options, and we are not a service that tells you what to trade. We are not implying or guaranteeing any profit. As always, do not trade with money that you cannot afford to lose. Past performance does not equal future results, and the results discussed in this webinar are not typical and are only valid on that specific or identified date. Your results may vary. By accessing this webinar, you agree to hold the above harmless from any loss you may incur as a result of information discussed in the media identified above. By accessing this webinar, you agree to be placed on our mailing list and receive our newsletter. Rest assured, we take your privacy very seriously and we will not distribute or sell your information to anyone.
All right, well, that wasn't so bad. All right, so everybody seems to be catching up, well, not everybody, but most people seem to be catching up now, so we seem to be in good shape. And let's take a look at what's going on in the world. That's not good. NASDAQ is still weak. Russell's kind of flat. S&P is up a little bit, and the Dow is up, but way off where it was, right? That's interesting. So, I mean, it's only technically up. It finished at the low, and now it's up here. But on the whole, it's a weak bounce from yesterday, and that's important to understand. So what happened? Dow went flying up, you know, on this typical stupid Monday thing. Then Tuesday erased most of the gains. And what's happening now? We held that line of resistance there. We're consolidating. Are we consolidating for a breakup or a breakdown? That's the question. So one of those two things is the answer. But when you see that, we're consolidating between the resistance points, right? So we're either going to break up or break down from that. So if you want a clue, then say, well, what's everybody else doing? The S&P broke up, but it looks like it's about to fail, which means that's bad news for the Dow. The NASDAQ also consolidating, right? And the Russell broke up, but is now coming back down. So when these two guys cross, then these guys become a good short, or you can pick a short here. So in other words, when the S&P crosses below this line and the NASDAQ crosses below this line, you want to short the one that's lagging. So basically we want to short the NASDAQ, and we want to short the NASDAQ when it crosses below 1480. That'll be our resistance line. So basically 3250 is going to be the line on the S&P. And when that crosses down, we're going to look for, because these guys are already in weak spaces, right? This is going to cross under. And if this crosses under, there's a very high probability the NASDAQ will cross under too. It looks lagging at the moment. It could change. Sorry, the Russell. So the Russell looks lagging at the moment, and we know the Russell is very fast moving, so it might be more fun to short the Russell. But 1350 is a very good line on the NASDAQ to short, so I kind of like that for shorting. Even, I don't know if I want to get 3255. I'm sorry, on the S&P, sorry, on the S&P, NASDAQ. That's the NASDAQ. We called that the other day. I said short 11,000. We had that the other day. That was obvious. So, you know, so here, I mean, very obvious, they're all pink lines. You can see where the pink lines are, right? The pink lines are the key. So he failed the pink line, he's failing the pink line, he failed the pink line, he's failing the pink line. If they all, whoever fails last, just take the one that didn't fail yet and grab him as he crosses under. Then if any of them go back over, which obviously would be most likely be the Russell, but if anybody goes back over, that's when you flip your bet. That's how you play the futures. You want confirming charts. So if you're playing gold and silver and the dollar, you've got to, you know, you got to set your charts up to watch. Here's gold. This is why my setup is like this, although it's messy. Where's gold? Here's gold. I'm sorry. So here's gold, silver, copper. It shouldn't be copper. It should be the dollar. I guess I was playing copper. Oh, frick. What's the dollar symbol on? Oh, sorry. Get out of the computer. See, all my setups are messed up now. Dollar, XDY. Okay, XDXY. $DXY. There you go. So, you know, if you want, in other words, if I want to short gold and silver, and I think they're a little bit toppy here, which I'm not, I wouldn't necessarily say that's true, but I'm just saying if. But, you know, so you basically, you watch which one falls last, and then you put copper up also. Oh, there's the dollar right there. HG, silly me. So I want to watch my metals, and you want to see a confirming action. So you see gold and silver broke up over their trend line. That's probably not going to last. It's not usual they make a big move like that. The dollar hit a resistance point and starts consolidating. So the dollar hit its resistance here, and gold topped out, and silver topped out. And so now what you want to do is you want to see the dollar here, see 94.95. If the dollar starts going over 95, that's going to put more pressure on gold and silver, and that makes them a short. Again, just an example, because we're talking about when when you want to get a good short and you want to be sure, you want to see confirming trends. So that means you look at other similar things that are like the thing you're shorting or going long on, and you want to confirm that that group is moving in the same direction. You can do the same things with stocks too. If you want to, you can do banks. You can set up 4 banks. You can set up 4 oil companies. If you want to do momentum trading, that's the way to go. You want to watch what the whole sector is doing, not just your one stock. Don't just look at one chart to confirm your theory. You want to look and say the whole sector is going to go up because of this. You also want to eliminate chasing performance. So in other words, if you think your stock is going up, blah, 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 you're like, oh, this is so great, it's doing so well today. Maybe the whole sector is doing well. You got to check to make sure you're really outperforming, or you're just drifting up with the sector. And then maybe your whole premise is silly because your premise is it's going to go up for X reason, but it's actually going up for other reasons with the sector. So that's why, you know, I look at these things all the time, and like 99, and that's the other thing, the most important thing about these games is don't play them. 99% of the time, I look at these setups and I don't make a call. Now, sometimes things get locked into a channel, and that's when you'll see me like for 2 weeks straight, I'm playing oil because it gets locked into a channel, and I'll play it every freaking day if I know what the channel is. But most days you don't. You know, most times you don't, so I don't play it. And that's why you guys will see me go like a month or 2 months. I won't even care about the futures. But then something happens and something gets into a trend that I can see and identify, and that's when I get excited and want to start playing. But you can't just always go out to play the futures. That's why people tell me, I'm a futures trader. I'm like, really? That's got to be the most boring job in the world if you do it right. Because if you do it right, you should only be trading like once a quarter. The rest of the time, you're staring at the screen saying, nope, don't like that setup. Nope, don't like that setup. Nope, don't like that setup. You can't just play it every day. You know, sometimes the market gives you fantastic setups. Like, let's take a look at the big chart. I don't remember if we have one today. Home. Did you only do it today? He gets a mask with a president's seal on it. That's funny. You would think Trump would get a cool tiger mask, right? When you looked at it like a shark mask or something like that, that would look cool. You should get a cool mask. Let's see. All right, so let's say not happening. So let's say all the indexes were here, the 200-day moving averages, right? They're all there, and they're all probably going to fail because if they're all hitting at the same time and there's not a lot of volume like there's not right now, what are the chances they're going to pop over? So if I had a reliable, like if you had a reliable spot at the 200-day moving average, this is not obviously, but if we were at the 200-day moving average, or in this case we're at the 20% line for the NASDAQ. But if you're at a certain number that's predictable, then you could use that to say on the chart over here and say, okay, well, we are running into resistance at that point, therefore we want to play it this way. So when something's in a predictable channel, I'm happy to play it. But like, what's a good example? Well, like here, look at this. See, here's the time, and we were playing the futures more here. See how this was going? See where you got top and bottom? You're going from 23 to 25, back to 23, back to 25, back to 23, or really 24, 23.50, back up and back down. So here's a channel that we can easily identify and trade in. There's a top and a bottom, and we trade the channel. That's very simple, right? That's how you can make a fortune. We went up here, we broke out of that channel, so we stopped trading. I don't know what's going to happen here. We went out of the channel. Now are we going to make a new channel? Yes or no? It's hard to tell. We can't tell here. We don't have enough information in the new channel. but we did have a double top, which I think we did short over there. Then it comes back down. Now we hold the top of the old channel. That's actually a bullish consolidation at the top of the old channel. So that's actually not a bad thing. We're probably going to break higher according to the chart. But again, that's only according to the chart. And here's the NASDAQ doing what everybody hopes these indexes are going to do. It's already done this consolidation. We had a consolidation here, which the NASDAQ barely had up until this date. So this old high, right? See that here? We broke out of that old high on the NASDAQ, tested it again, came back over, came to the top of the channel, and now we busted out of the channel and we're up how much? We're up another 10% basically. So these indexes haven't done that yet. They're not up there 10%, but they may go up 10% more if the NASDAQ and everybody holds. I think it's more likely the NASDAQ is going to drop 20% back to this line. We'll see what the earnings are. So far, only the big guns have reported. You know, as a lot of you know, PSW Investments, for example, we have like 8 little companies that report to us their K1s, and obviously due to the virus and everything else, everybody's late with their K1s, so we can't do our K1 until they do their K1s. And this is, you know, obviously this is small companies, but even big companies, even decent sized companies, they have a lot of issues getting their reports together, and they don't plan to report first. You know, big organized companies with very predictable revenues and not likely to have problems are the ones that report first in the earnings season. That's why it's very often that the beginning of earnings season always seems good, and then you go, what the hell happened? What happens is that the smaller companies, the companies that don't have these gigantic accounting teams, that don't have all these auditors, that don't have the ability to quickly report something, they're bogged down. You know, they may have an outside auditing firm that comes in, but they also have to come into 25 other companies during the quarter. They can't get to everyone at the same time. They take time to get their reports out. Perfectly normal. But in this case, you've got the early reporting companies are the ones that are dominating the news and dominating the cycle. So you get this false impression that things are not so bad and everybody's riding out the virus and, oh, look at Intel. Oh, look at this one you like. Oh, look at that one. It's like, that's not a really reflection of what's going on in the economy. We haven't heard from like McDonald's and things like that. We haven't heard from like a lot of these small companies. Oh, now I need Twitter again. You bastards. It's always the thing you close that you need the next. Okay, hang on. Let's go to webinar. We need that. Don't need the New York Times. Well, we do need the New York Times because God forbid this paper went away. We would have no idea what's going on. It's really nobody else. There's nothing else left that tells you real news. Where was I talking? Twitter, right? Beautiful Twitter. We're in. Oh, why am I looking at PhilStockWorld? Let's just go home. Login? What are you talking about? Why would I have to log into Twitter? What kind of crap is that? All right. Earnings whispers, these guys. I just wanted to go over who's reporting this week. What is that? That's cool. Oh, no kidding. That's cute. Okay. So before the open Thursday, that's not helping. I want after the open. Is this after the open? Before the open Tuesday. Oh no, wait, before the open Thursday. A little confusing, isn't it? After the close Wednesday, that's today. There you go. So what do we got? Wow, look at all these people reporting. So we got Tesla. Look at this. So Tesla is going to now explain why, since the beginning of July, they are up from 800 to 1,500. So they're up about 100% for the month. Microsoft looks dramatic too, but these are weird scales. You got to be careful about watching charts. That's another thing when you watch charts. You really got to be aware of the scaling, because that's a double, and this is only up like 10%. You know, so Microsoft maybe can adjust. Chipotle, another one I'm shorting, is up here also. Crazy stuff. LVS, you know, they got in their ass kicked in Macau and all that, so we have to find out what happens to them. CSX, Allergen should be a potential virus cure, has a good possibility. Netgear, I don't know what they're actually doing. Whirlpool, we have Whirlpool, we know they're good. KMI, because again, you know, having the virus, you might do a little bit less laundry, but honestly, I think we're doing just as much laundry now as we ever did. I don't think it's really changed. That's because I always wear t-shirts anyway, that's why. It doesn't change my consumption of t-shirts. You know, people are still buying washing machines. They break, you buy a new one. End of story. It's just, that's life. KMI, people, you know, there's not enough of a recession yet that people are putting that off. Suncor is interesting down there. Equifax, and who knows what they're doing. And Plexus, I have no idea. Let's see who's important. Kaiser Aluminum, Sands, Sally Mae, interesting. CSX, oof. See, really hard to call. That's why we're still watching, because we need guidance. This is not really clear on what these are, but these are all still big blue chip companies, right? Not a lot of little guys are reporting. We know you know, this is the meat of earnings season right now, so we still have a lot of the big ones reporting. Most of these guys have ways to adjust. Las Vegas Sands, probably going to take a hit, but Kelly, who owns it, he just made a big contribution to the Republicans, so I don't think he's really hurting. I think they're okay, and his wealth is very tied into the business. We'll see how he reports, so that'll be interesting. Or he might be making a big donation, so he gets a big bailout. Who can tell? Let's see. What would you recommend for a hedge right now? Ken is asking me. Well, Ken, it's like hosting a show. All right, Ken, let's see. First of all, we missed it. Damn it. Okay, so here's what happened. So now the NASDAQ broke, I'm sorry, the S&P, I keep thinking that's the NASDAQ. The S&P broke below. The NASDAQ, which is ridiculous, is breaking down. The Dow's breaking down. Who hasn't broken down yet? The Russell. So what do? We short the Russell. Yay. Active trader. And then we go RTY. But I don't like that. See, I don't like the way it's holding up over there. But it's, you know, it's possible it can just bounce off the resistance. We'll see what happens. But yeah, so we grab the short, 1483. See if we can get that. There we go. That was easy. All right, so now we'll just see what happens. So we just grab a short. And what we hope is that these guys keep falling and it follows. But what are we going to keep doing? We're going to keep raising our stops. Or lowering our stop, basically. So at the moment, we're fine. You know, as long as we don't go back over that line, we're good. But if these guys keep going down, we're going to start expecting the Russell to start catching up, and we'll see what happens. But that's all it is. So if I'm going to make a futures trade, I want to short the lagging. The one that's the last to cross over is the one I want to short. And then you just put a tight stop on it. You watch the other guys to see if they stop going down. And maybe we'll get out and take our quick money, and maybe we won't. We'll see what happens. But that's it. That was pretty easy. So Ken said, what do you recommend for hedging? There you go. We hedge by using the Russell for short. We'll see how it goes. And as you know, obviously, I was writing this today. I mean, I think the whole thing is bullshit. I don't want to be like, I don't want to be Mr. Gloom and Doom. I'm sorry, that's my job. No, see, I don't like having to do this every week, but nobody listens. It's annoying. I'm a very positive, happy person. I think I've said this before in the webinar. I don't like being the guy who tells you how horrible things could be. It's not my nature. I usually tell people how to fix things. My daughters have crises. I'm the guy who tells them how everything's going to be fine and we should fix it. But this is not fine. He's not fine. He's our leader. It's a big problem. You know, I mean, when your football team sucks and the coach sucks, it's hard to fix it. That's the problem. I'm not getting on an anti-Trump thing. I'm just saying that this is a problem. It's not really like we're doing better. It's good that he's wearing a mask. It's good that he's addressing the issue a little bit, but he's addressing the issue because the polls are telling him that he's getting killed by not addressing the issue. That people are losing complete faith in everything he's doing because he's basically like the emperor's new clothes. I mean, it's just pretending there's no virus or that it's not a threat or whatever, when clearly it is. We've been in jail since March. I live in Florida. It's horrifying to go outside in Florida when you know that 1 out of 100 people are carrying a virus. And I mean, other parts of the country aren't great, but I am living in a freaking horror show. So, you know, it's just, and nationally, I mean, that's why I pointed that out this morning. I mean, look at this. This is going up faster than Tesla. That's really, really fast. Look, here it's doubling, just like Tesla. So what's more ridiculous, an infectious disease or an electric car company? Dow went negative, S&P went negative. Probably doing good on the futures. Let's see how we're doing. Oh, $15. All right. I love it. All right. Well, won't worry about that then for now. So where was I? Anyway, so don't want to be, I don't want to be dooming. You know, it's like what I said the other time. I said car. That's right. Last week I was saying car. I'm like, I don't want to be doom and gloomy, but God, look at this. This was really bad. We did something about it. We locked ourselves up. It started slowing this much, and they said victory. And they said, everybody go back. I'm sorry. No, my mistake. We were here. We were here when they declared victory, and we ended the lockdown. Oh, no. I'm sorry. I was right. It was the end of May. No, right. It was a May holiday. So it was really bad. We went on lockdown here because it was getting catastrophic. This was when we decided that we were all going to stay inside, shut down the economy, et cetera, right? We decided that back here. So then April, that's what's confusing because it's not 1 month each, it's a couple of months each. So then we get into May, and here we are. And in May, we decided we had declared victory. Even though we went from 500,000 to 1.5 million, they declared victory over the virus, and they said, now everybody go back outside. So everybody goes back outside. Of course, it doesn't. You don't get reinfected the second you go outside. It takes a few weeks for people to start showing symptoms, and by then it's way freaking too late. And that's where we are. That's what this is. Way too late. Way too late. And we are still not doing enough to fix it. Just wearing a mask is not enough right now. Mingling and wearing masks is not enough right now. And what are you gonna do? But again, the virus, I read this today. Oh, must be the New York Times, right? Because, every time I get rid of something, I need it. Isn't that crazy? Virus infection rate. EU agrees. What is RO? How deadly is the virus? There it is. Nature. No. News. Oh, virus rates 10 times higher than reported. Isn't that lovely? Case count 6 to 20 times higher. New bases, infection creates, wastewater continues. You know, and again, I don't like to dwell on these things, but isn't this the basis of our entire investing decision, is what's going to happen to the economy? And what do you think is going to happen to the economy? What is this? Go away. Ugh. Seriously? By the way, this is the trick. You right click on something if you have Google, and you say open an incognito window. And the incognito window allows you to view things and not have to worry about the ad blocking stuff. Oh, that's so ugly. But then you get ads and you ruin everything. So evidence-based COVID-19, blood samples, blah, blah, blah. Okay. So true COVID-19 rates are 10 times higher than reported cases in some regions. That is horrifying. Blood samples, 16,000 people. Detected infections, people have no symptoms, only mild. I mean, so what? That's fine. That's actually a good thing. It's good that a lot of people have it and are not really infected. But maybe I should say death rate. That's even more depressing though. Virus death rate. I know I read this today. We have the best mortality rate. Yeah, we're good at dying. 140,000 of us so far. Oh, was it the Washington Post? Okay, I might have read that. Oh, that's interesting. Look at that, death rate compared to flu rate. This is really important though. I hope it's current. June 23rd, not really. Yeah, there you go. This is what I was reading today. On average, the flu's death rate is 0.1%. Coronavirus's death rate 5.2%. That is 50 times more deadly than the flu, and it's more contagious. So you have to start thinking about what all this means. See, that's the thing. This is what I'm actually good at. I mean, I read a lot of stuff, and my brain makes these little connections, and they put things together. But unfortunately, sometimes it puts things together you don't really want to think about. And what we've got now is we've got a situation in which we are out of control. And the other thing I'm good at is math, of course. So, it's like, although it doesn't look like it when I'm doing a webinar, I'm trying to do it on the fly. But, oh, where'd that thing go? Here we go. So, so when I look at this, there's several things in my head when I'm looking at this, and I'm thinking of the death rate. I'm thinking of the infection rate and how fast it's spreading. I'm thinking of the fact that I read that there is 10 times more cases than you think. So that means that 40 million people are infected, effectively 1 out of 10 people in the country. Not necessarily actively infected, but 1 out of 10 people in the country have already come in contact with the virus, have antibodies. Antibodies are good. Once 1/3 of the people, but here's the thing. Well, see, then that's like, see, if I go through my thought process, I realize like I think of a lot of stuff. So in that case, what I was thinking of is that I think of that, and I think of like, I know that 1/3 of the population has to have antibodies before you begin to develop herd immunity, because let's say that 1/3 of these letters had antibodies, right? So antibody, or let's say on this word, antibody, 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 antibody. Now, that's good though, because if you think about it, I wish I had something to scratch it out with. Let's see. I guess I could write it. Okay, so A XX, A XX, A XX. And we go, well, no, I don't want to do that. Okay, I know what to do. A XX, trying to randomize it a bit. A XX, A. Well, obviously it's not random though. XX, A, X, X. X, A, XX, A, XX, A, X. Oops. XX. Okay, so 1/3 of the people have antibodies, right? So here's the thing. If nobody has antibodies and one person's infected, that's bad. But if this guy's infected, he doesn't have an antibody, he's infected. Let's say that's two different things. The person with an antibody had it already and is immune. So this guy has an infection. He's going to get this guy sick because he's sitting next to him in a movie theater, but he's not going to get this guy sick because he's too far away. He's not going to get this guy sick because he's going to get that guy sick, but he's not going to transmit it because he's not transmitting yet. This guy's got an antibody, he's not going to get sick, and then that guy's not going to get sick. Whereas if nobody had an antibody, this guy would get everybody in this area sick, and they would all infect all their friends. So that's why even when you get to about 1/3, you're really starting to limit the spread of the virus just by random distribution of the people. So in other words, there's a good chance the virus doesn't spread because 1/3 of the people coming in contact with that person can't get it. They're immune to getting it, in theory. So your chances of coming in contact with an infected spreading person become less by 1/3, obviously. That slows the transmission of the virus. Slowing the transmission of the virus is the whole key to everything. That's how you fix it. You stop transmitting the virus. That's why you wear masks. That's why you have protocols. That's why we stay inside. You stop the transmission of the virus by slowing it down. You slow it down by keeping people away from each other or developing herd immunity. We as a country are basically on the herd immunity path. We are not on the good path. But okay. So herd immunity means we have how many people? We have 300 million people or 330 million people in America. And that means we need 1/3 of them. We need 110 million people to be infected before the virus peaks out. Aha. Now back to the numbers. So where are we? We are 10 times more is only 40 million people. We're nowhere near 110 million people. It's going to get much, much worse, as the president said, because somebody is briefing him on this stuff. And he now, maybe it's sinking in the inevitability of what's going to happen. But here's what he's upset about. He couldn't care less, except this is going to happen between now and November. Unfortunately, things will get worse before they get better. This is what Trump is finally starting to understand. Before this herd immunity thing kicks in, which is honestly what they're going for, this is the policy decision they made to allow everybody to get infected. But before herd immunity kicks in, 3 times more people are going to get sick than are currently sick. 3 times more. And that means 10 times. That means 3 times more people will be dead, and probably more than that, because as I keep saying, which everybody doesn't like to talk about, we have 140,000 deaths, but only half the people who've been infected have had outcomes. So in other words, these people are already infected. The ones that have been infected so far, 140,000 have died, but half of them haven't had an outcome. They still have it, and they haven't died yet. Or they haven't gotten better or died, one or the other. It's Schrodinger's outcome, right? It's like you have to observe it and find out what happens. So they could die or they could recover. But the problem is, statistically, from what we're looking at, 5% of the people infected are going to die. That's going to be the outcome. Of the outcomes, 5% of the people die. So far, we have 4 million infections. And what is 5% of 4 million? Just 200,000, isn't it? I think so. That's my guess. See, I do math in my head, but it's like I'm always doubting myself. So we got 4 million, so it's 4,000 times 0.05 is 200. Well, yes, 200,000 people, right? I was right. It took me a long. See how long it takes me to figure out that I'm right? It's annoying. Anyway, so it took my wife that long. That's okay. It took my kids that long. They finally realized Dad's right. So we have, so basically, we're on this track. 4 million people infected. So far, 140,000 dead. We're heading towards 200,000 dead, maybe 300,000 dead. 5% of the people who get this die. Fact. Okay, what's going to happen next? We're going to go to 120 million people. So we're talking about 600,000 people dead on the current path before we get to herd immunity. Herd immunity doesn't mean you won't get sick at all, right? Because now we can go back to this. Herd immunity doesn't mean you're not going to get sick, because look, this guy's infected, you're going to get sick, but not everybody gets sick, because you have 2 antibody people buffering everybody else. If he coughs on him, he's going to be okay. If he coughs on him, he'll get infected too. If he coughs over this way, that guy might get infected. But as long as he kind of hangs out and eats his popcorn or whatever, only this guy's going to get infected. That's much better than if this guy gets infected and that guy, if this guy has it and that guy gets infected and he gets infected, and then they infect their friends later, and then this one gets infected or that one gets infected. That's way worse, right? But meanwhile, you could see how you could be sitting in a movie over here, not here, sorry, over here, next to your antibody friend, and this guy can be eating his popcorn and slurping away or whatever, and touching this guy's arm with his arm, right, at the movie seat or something, and you'll be fine. Because he can't catch it from this guy. So you'll go home and have beers with him and you guys will be no problem. That's herd immunity. Now, that builds up. The thing is, herd immunity doesn't stop much more people from getting it, but it takes a much longer time. But it's not going to stop. So in other words, just because we hit herd immunity at roughly 600,000 deaths, that doesn't mean that we stop at 600,000 deaths. It just means the spread of the disease slows down and then we move forward. But the problem that Trump has, and the reason he's sad, Donald is sad. Why are you sad, Donald? Donald is sad because this is all going to happen between now and November. Because here we are in May, right? Here's May, June, July, and we're only into July. So here's what May, June, July looks like. So here's May, 1 million to 4 million. And that's 3 times more, basically, right? So actually it's 4, multiply 1 by 4, and that's where we are. That's bottom line. So here we're going to go from 4 million to 16 million. And don't forget that 16 million times 10, 160 million people infected. So about 3 months from now is when we're going to finally hit the point, 120 million people. About 3 months from now, which is unfortunately for Trump, August, September, October. So in October, we are going to be at peak infection and he can't stop it. It's not stoppable now. Unless you went to a full military lockdown like China did, where you basically stop people on the streets, take their temperature, everybody wears a mask or they arrest you on site, that kind of crap. Unless we go to that kind of situation, you cannot stop this thing. Certainly not the way we're doing it here. Obviously not the way we're doing it in Florida, but nowhere in the country are we doing what you need to do to really stop this thing. So 3 months from now, 600,000 people are going to be dead at his feet while he's trying to tell you to reelect him. And it's not going to be getting better. There'll be no noticeable sign that it's getting better. And you'll have basically almost getting like one third to 1/2 of the country will be infected, and by then they'll know it for sure. Like right now, they're just talking about it. The scientists are saying that the tests they've gotten and so far, because we aren't testing everybody, but the scientists are saying statistically, which of course Fox News tells you to ignore, but statistically, scientifically, because you're sampling 16,000 people, you're not sampling 30 people in a classroom and telling them to raise their hand if they're infected. You're sampling 16,000 live human beings and getting a statistical sample that you can extrapolate to the rest of the country. Statistically, they're saying it's basically 10 times more people infected. That's good because they have antibodies, and that means they already have antibodies and they're not in the hospital. Great. We're all for that. But the reality is that we're a long, long way because we have a lot of freaking people in this country. We are a long, long way from peaking out. And also the problem for Trump is right now, as I talked about last week, because it's a crisis, right now, the market's going back up. Right now, because it's a crisis, we have we're going to end up with 600,000 dead at the start. It'll probably end up being over 1 million people dying from this thing. It's going to all fall on his ass. There's no way he's going to get around this in the debates. There's no way he's going to get around this in anything. And it's going to wreck the Republican Party. They're going to try to stand behind him. It's never going to work. It's going to kick the Republican governors out. It's going to be a disaster for the Republicans, a total disaster. Good. I mean, screw them. But screw us also, because we're the ones who are going to deal with 1 million dead people in this country. And also people who have, people who don't die but are very adversely affected by the virus. That's an issue too. This is a devastating thing happening to the country. You got sick people, you got people caring for sick people, you have the economy slowing down, you have to keep these measures in place all the way through November, through the winter. This idiot keeps talking about there being a virus cure, that there's a vaccine, blah, 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 blah. None of that shit's going to happen until March. And by March, half the people in the country will have been infected already. So all you're going to do is hopefully help the other half, and then we quickly move past the virus. If half the people have antibodies already and the other half get fake antibodies in a vaccine, fake, I mean, you know what I mean, like it encourages your antibodies without getting the virus. then we'll be good. So that's great. What we really need is like a treatment, though. Like I just said the other day, I said it's like if you have pneumonia, you have drugs to take to get rid of pneumonia. If you have bronchitis, you have drugs for bronchitis. We don't have a drug that fixes this COVID, and that's not going to happen. It's harder to do that than it is to have a vaccine. The vaccine is a very simple thing. You're artificially telling your body how to get the antibodies to something it hasn't actually gotten the disease for yet. You give the body a crippled version of the coronavirus so that it would recognize the coronavirus and react to it in the future because you had it, but you had it in a way that they take the coronavirus and make it sort of like it can't really hurt you or can only give you a mild sort of symptoms. I mean, people have headache and nausea and things like that from getting the vaccine, but so what? I'll take headache and nausea for a couple of days and then I don't have to worry about dying. But that in a nutshell is the economy, though, for the next 3 months, for sure. It's not getting better. That means Q3 is going to be as bad as Q2. So let's not delude ourselves, okay? It doesn't matter how much money they throw. Well, then it goes back to the other crap, and I'm not going to harp on that, but we don't have to, I don't have it up here anyway. The deficit chart that we keep looking at, the deficit's out of control. And the revenues are spinning backwards because we're collecting less and less tax revenue. And that's going to get worse, by the way, because these companies have not yet reported all their losses. And when they report more and more losses, that means more and more negative revenue for the government. And the deficit climbs and climbs and climbs. And that's why Congress is freaking out, that they don't want to be a part, especially the Republicans. They're like, they can't be a part of this. They can't vote for these freaking things. They're going to pack up the deficit. It's not just the Democrats they have to worry about. They have to worry about other Republicans in their district who are going to run against them and say, look at the freaking mess this guy made in Washington. Look what he voted for. He voted to run our deficit up by $3 trillion, $4 trillion this year. This guy voted on it every time. That's the problem with being a Republican, right? Because you're running on the fact that you're like supposedly going to keep the deficits under control and that, whereas the Democrats, they go the opposite way. They're like, we spent $4 trillion this year, and again, not irresponsibly. I know it sounds that way to conservatives. It's like we spent $4 trillion because we needed to spend it. It was like there was this horrible virus, and we thought it was necessary to do this, and we saved these people, and we gave them the unemployment checks, and we did this, and we did that. Democrats run a totally different campaign than a Republican does. But it's just like the Democrats who voted for the Iraq war got their asses handed to them, right, by other Democrats, because they're like, how did you participate in this farce? Why did you vote for this bullshit? How did you allow the military to do this? That's what happened to the Democrats back then. The Republicans, I voted for that Iraq war. We sent our troops over there, blah, blah, blah. It's a whole different thing. But that's what's being set up now, is this whole different thing where like these Republicans are all going to get thrown out on their asses. And it's going to be a huge, huge swing. It's going to be very interesting to watch what happens. But the bottom line is, for this guy, he's screwed. This chart's coming right at him. You cannot run away from this, and you can't stop it, and there's nothing. It's too late. It's been too late for quite a long time, and it's getting too later. This thing is going parabolic, baby. These things are gapping away from each other. And unfortunately, that's us, man. When was this? This is today. This is us. 15 million people infected worldwide, but 4 million of them are right here. 4 million people in the US. More than 1/4 of the world. More than 1/4 of the world's total infections right here in America. You add Brazil, and we've got almost half. You add Brazil, and we're at just about half of the world's total. Where's China? The Chinese virus. Where's China? China. 85,000. Remember how it was like 80,000 in March, China? And we were like, China, 80,000, blah, 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 blah. 85,000 now. They've only had 5,000 infections since then. We've had 4 million since then. They did exactly what we should have done. It was a little bit harsh, but that's what you got to do. When you see these Dustin Hoffman movies or whatever, and the virus comes to the town, the army comes in there, and they all have the guys in suits, and they put a tent around the town, and they take all the people away, and they wrap them up, and they put them in quarantine. That's pretty much what China did. But when they do it in these virus movies, those guys are the heroes. They're not the enemy, they're the heroes. The government comes and does what it has to do to stop the virus. This government has not done anything to stop the virus, and you can't even see our country anymore. Talk about the Red Menace. There's the Red Menace. We're out. We are swamped, overrun. But here we are in the first month of Q2. Quarter 2 started 20 days ago, 22 days ago. This is what America looks like in quarter 2, a lot worse than it looked in quarter 1. Yet we are still acting like that doesn't matter, and it's not going to affect the market, it's not going to affect earnings, and it's bullshit. It's a lovely fantasy, it really is. It's nice to think things don't matter, but they do. All right, questions? Oh, I'm sorry, Rick was asking for, or not Rick, who the hell was asking? Ken, we'll get to you, Ken. So how are we going to hedge this? Jason says, do you have info on how to set up Thinkorswim on the same types of charts you're doing? Yes, I do. It's the end of that discussion. LOL, LOL and outbreak. The government was going to bomb the town. Oh, yeah. Yeah, I mean, that's, if it was an Ebola kind of thing and a whole town was infected, you can understand that you might want to nuke the town. Just be like, just kill it, kill everything within 100 miles. This isn't quite like that, but it's bad. And the thing is, it's, I think the 5% number is a bit overblown because I think it's 5% of the people who are symptomatic. But again, that 10 times thing makes it less, it makes it not 50 times worse than the flu, it's 5 times worse than the flu. So in other words, what I'm taking into account in my mind is that, yes, 5% of the people who are infected, I'm pointing with a stick here, that doesn't do you any good, does it? 5% of these people die. But these people aren't all the people infected. There's 40 million people with antibodies that have had mild infection. That's a bit over 10% of our population, but we don't get the immunity. It doesn't start kicking in. It's not really immunity, you understand. Herd immunity is just what I showed on that chart. It's just spacing. You're buffered by people who are immune. Therefore, in any kind of group situation, you are statistically 1/3 less likely to get the virus. That means the transmission rate is cut by 1/3, and that's good for you. That's what stops you from getting it. Or again, you have a better chance of there being a vaccine before you get seriously ill. But there's still going to be a very unlucky 1 million people in this country who die playing this game. And obviously, I think the worst case is probably 2 to 3 million is the worst case. That means basically the virus, if you assume everybody in the country eventually gets it, that the virus is roughly 1% lethal, which is not, again, it's about 10 times more lethal than the flu. So I think somewhere in the range of 1.5 million, which is 0.5%, to 3 million will ultimately get this and die. The biggest problem we have, which of course was why you were supposed to flatten the curve, and this is not a flattened curve. That's not what flattening the curve means. So the reason we're supposed to flatten the curve is because the hospitals, and now I'm getting the virus right while I'm talking to you. No, you know what it is? It's a talking thing. I had this last week too, right? My throat starts going. It's too much talking. So you're flattening the curve to not overwhelm the hospitals, but we have overwhelmed the hospitals. It's too late. We've already overwhelmed them, and we are not doing anything to stop them from being overwhelmed. So we now have a hospital crisis in addition to a virus crisis, in addition to an economic crisis. And now on top of that, in 7 days, we are adding an unemployment crisis. This Friday is everybody's last unemployment bonus check. Unemployment checks are usually $250 a week. And we have been paying people $850 a week, which, as any Fox viewer knows, $850 a week is more money than most people were getting as a salary when they were working full time. Most of the people getting it were not making $800 a week when they were working. So they've had more money to spend. So that's kept Amazon busy and Netflix busy, and that's kept Chipotle busy and everyone else, because everyone's got all this money to spend. That's all being taken away from them, from 30 million people basically. It's not just 30 million people though, it's 30 million people and their families. These people have families, you know. Oh, and this back to school thing. Oh my God, speaking of families, holy crap, we were gonna send our kids back to school? I mean, is the plan to infect every single person in America? We're gonna take, you could be the most careful person in the world, and your kids could be careful kids, but you're gonna push them back into a school. Do you know what a hall in a school looks like? Forget the classes. I know, and they love to do this too. Look, school hallway. Crowded. It's too more crowded. I don't know. Crowded is obviously. Okay, that's interesting. It's like, so look, school hallway, lovely, right? Hey, let's send the kids back to school. That's the reality. That's what we're going to do with our kids. I mean, maybe some of you guys are like rural people or whatever. This is what a school looks like in New Jersey. The school's not going to function. You only have X amount of time between classes, this and that. If you start changing it, it's not going to get, you have to make all these changes. I mean, this is school. This is what school looks like in the Northeast. And I'm sure in lots of places. I mean, I know where I live in Jersey, we're technically not heavily populated, but because we're not heavily populated, 3 of our towns have one high school. So my kids go to Passaic Valley High School. Passaic Valley High School serves 3 different towns because none of those towns are all that big that they support a high school. So they go to a school that's super crowded just like this one, because it's not economically efficient to have less. This is what it's like. You can go and pretend you're going to socially distance in the class and do this and that, but how are they going to get from class to class? All right, and no one's going to drink out of the water fountain. You're not going to sit in the cafeteria. Is somebody going to wipe down every chair every time someone sits in it? Is someone going to wipe down the desk every time someone sits in it? And if they're doing that, then how much of the class time is going to be taken wiping things down and checking things and making sure everything's clean and getting the things, and where are these supplies going to come from and who's paying for that in the school budget, blah, blah, blah. We have done none of these things. We have done nothing to protect these children. And it's not just them, because every single one of these kids is going to go home. If one kid, if she has the virus, because you could be careful, and you could be careful, and you could be careful, and you could be careful. All these people can be careful at home, yet this one infected person is going to walk through this crowd and infect all these people, and they're all going to go home and infect all their parents and their families and their brothers and sisters. They all have brothers and sisters. The average person has 2 kids, right? So and they all have brothers and sisters. They'll infect them, and they'll go back to their school, and then they'll be patient 0. So then this little guy this is her little brother, and now he comes in and he infects everybody over here. And then this guy, okay, that's him. Okay, that's his sister. She's infecting that group now because he got sick from, she gave it to him, he gave it to him, and he gave it to her, and now they're all screwed too. And guess who else is screwed? Every single parent in this school. Because if only 1 or 2 kids are not careful, or one or two families are not careful, and think of all the connections and all your workers and everything else that has to happen in this normal world. And what do you think? Do you think we're not going to get infected? Do you think this isn't going to cause a massive spread of the virus? I mean, why are we not going? We're not going to ball games. We're not going to soccer stadiums. We're not going to concerts, but we're going to send our kids to school? That is freaking insane. I mean, it's ridiculous. But anyway, and again, I'm not to be gloom and dooming, but to say, look at the economics of what we're doing. We are absolutely going to infect. We are absolutely going to get to herd immunity at 120 million people. And herd immunity is not necessarily a great thing. It just means that at that point, the virus slows on its own. It slows on its own because 1 out of 3 people have already been infected, so it can no longer infect 1 out of 3 people. Therefore, it slows down. It's just as infected, it's just as infectious, but it keeps running into brick walls of people who've already been infected. Therefore, it has less of a spread. That's when you start to get on top of something as a society. But economically, this is going to just be a rolling disaster that doesn't get any better for the next 3 to 6 months. You know, people have to get realistic about this stuff. So how do we protect ourselves? Well, let's find our portfolios. Well, we don't have any portfolios. Isn't that interesting? Okay, it's power options. Let me log into power options. That's interesting. I didn't have to actually put my name in. I don't know how that worked. But that is us. Here's a short-term portfolio. So it's Ken, I think, who's asking this question. All right, Ken. So we did our short-term portfolio last Tuesday. You know, and again, look, you know, we're running these portfolios, right? But you shouldn't do this with money you can't afford to lose. It's too risky. Just like going outside is too risky. It's like you know, you probably won't get the disease. Statistically, it's 1 in 300 you're going to get it. 1 million, not get it. You might get it, but only 1% of the people, 1 million, 2 million people, you have a 1 in 300, 1 in 200 chance of dying. All right? If you have just as much chance of dying of the flu as you do of the coronavirus flu, as you do of basically all the different car trips you've taken in your life, right? 1 out of 300 people are going to die in a car accident during their lifetime. So during your lifetime, you have about the same chance of doing that. Now, doesn't stop you from going into a car, does it? You just hope you don't die. You know, I would think we've all been in accidents. I've been in a couple of accidents, not because I'm a bad driver. I got hit by other people. I'm sure everybody says that. I guess it's kind of meaningless, but you know, we all get into accidents, I think, and it could be your fault. It could be somebody else's fault. I don't think that's the point. And I mean, I know people who've gotten in accidents. It's their fault. My daughter got into an accident. Somebody hit her in the back. It's not her fault at all, but it's devastating. And it does make you think. I got hit really, really hard once. I was in traffic, and I was at a light. I was stopped. I remember where I was. I was in Englewood. I was in front of a car dealership, and I was talking on the phone, which you're not supposed to do, I guess, but it had nothing to do with the accident. This is before there were rules against that, because not everybody had cell phones back then. But I'm talking on the phone, and I'm sitting waiting for the traffic to start moving again, and there's nobody behind me, except suddenly a car is coming up behind me at, like, you know, 30 miles an hour. And you know, at first you don't think about it, because you know how people sometimes they kind of like step on the brake and whatever. This person, but you get to a certain point and you're like, damn, they should have stopped by now. And I'm looking at this in the mirror, I'm like, holy shit. And fortunately, I had my seatbelt on. But I'll never forget, because the phone, she hit me so hard in the back of my car, and fortunately I had a Mercedes SUV, so it could have been really bad if I had a crappy sports car or something like that, I could have been killed. She hit me so hard, she totally wrecked the front of her car. The phone that was in my hand went flying out of my hand from the momentum and smashed into the back window of the car. So she hit me so hard that the phone left my hand, where it was right by my ear, and flew to the back dead straight along the same path at the same height, like it didn't lose any height, hit the back window of the car and broke the back, and cracked the back glass of the car. She trashed the back of the car, but thank God the car is beautiful. I mean, Mercedes is beautiful. They absorbed the impact. I was like, I took a big hit. I was jolted, and I was talking to my wife at the time, and the last thing she heard me say was like, "Son of a bitch!" And then she would smash, bang, boom, because I saw them coming. I'm like, "What the frick am I supposed to do?" So, fortunately, I slammed on my own brakes. I mean, we weren't going anywhere, but I was smart because I put my foot on my own brakes, and I braced myself on the steering wheel because I knew there was no possible way I was going to get hit. There was no question she was going to hit me. So luckily, I saw it coming. But I mean, holy crap, it was incredible. So the randomness of things, right? And I've been skiing. I've almost died skiing a couple of times, but that was fun. So I enjoyed that. I was having fun. So you don't not do, as a skier, I can tell you that. It's like you don't not do things just because you might get killed. In life, you take some risks sometimes. But this is a stupid risk, right? I mean, it's stupid to, I probably won't die if I just go out and have a normal life and ignore the virus. Probably. I might die though. And I don't think it's not like I'm having fun. I mean, I'm obviously having fun being at home, but it's like I'd rather not take that chance. It's a needless chance, and it's not just for me, it's for my children, it's my family. I think they like me. I think they would miss me if I died. So, so for their sake and for my sake, because I would like to keep living also, I think it's a good thing to protect yourself. And that then applies to a portfolio too, though, right? I like my money. I want to keep my money. I would like to have my money grow over time and be with me for the rest of my life, right? So why would I take stupid risks with it? We all take prudent risks with our money. We all invest. We expect to invest in things that are hopefully going to be going in a certain direction. We hope our money will grow. We hope the stocks we invest in will prosper. They might not, but we don't generally think that they're going to wipe us out. But what happened here in March, here you go. So this isn't March. Here you go. This could happen again. This was only not even a month. This could happen again. This could happen in 5 days, 7 days. And then you're going to go, oh, maybe it's not so bad. Maybe we'll recover. Trump says it's okay, blah, 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 blah. Then all of a sudden, here's another 7-day drop. And then here's another 7-day drop. And then all you're doing is sitting around praying that you get your money back. Just like if you get this virus and you happen to get a bad case, you'll be praying you live. Is it worth it? Is that worth it to go out to Burger King or something like that? No, of course not. That's stupid. So don't risk your portfolio for no reason. And that's the thing. I mean, it's all fine to risk something. I said we're up these ridiculous amounts, so we're risking money that's like found money. But on the other hand, if this money, even if you're up 200%, that doesn't mean you should throw it away. Depends how comfortable you are in your life. It depends how much you need that 200%. Depends if this was play money or if that's your whole retirement. If that's your whole retirement, why would you risk it on this market? It's crazy. All right, so Ken says, what's a good hedge? The best hedge is not being in the market. Just take some small positions. Just don't sit there and keep your portfolio active, betting on your hedges to cover you. We went down 40%. Now, when we were down 40%, the short-term portfolio was up 500%. but the long-term portfolio was down 40%. So long-term was down 250, and the short-term portfolio was up maybe 250 or something like that. It was close to even, but it wasn't. It was dangerous. It was scary. You can't rely on hedges to totally save you from everything. You know, and on the other hand, not having hedges at all, it was complete madness. And if you're not comfortable with your hedges, if you don't want to go through the pain, if you don't want to have to deal with these positions, and especially if you do not have the balls to double down, if you are not going to take, if this thing goes up to, it has 500, that's catch the value. This is 341, okay? If the market drops 20%, this is going to go up to $700,000. The long-term portfolio will go down to $450,000. That's a big drop from where we are now. That's going to be $1150. We're at 13 now. So even if everything does what it's supposed to, we're still going to lose $150,000. How much is that? That's 10% of our portfolios, the combined value of the portfolios. That's on a 20% drop in the market. We'll probably lose about 10% of our value. But we get to take this cash, and we get to use it to buy more long-term positions. Only assuming though, that we believe that we're down on the second wave of the virus and that we're going to reach herd immunity. I'll be having a whole nother conversation when we have 120 million people infected and 200,000 people dead, and everyone's going to say the world's going to end. And I'm going to say, oh, no, now we're coming around. Okay, that's when I'm going to be suddenly Mr. Sunshine for you guys. Just like I was in March. I said, this is an overreaction. And I will tell you next time, it's going to be an overreaction. I look forward to the overreaction. But why are we riding it out? We didn't know this was going to happen in March. But we sure as shit know it's going to happen again on the second wave of the virus. So I don't need to lose the money to go along with the market. This is very, very dangerous, very difficult to decide time. Now, the only reason we're still in things is because we're expecting some stimulus. But at the moment, I can't even believe they haven't extended the unemployment yet. This is crazy. They're going to cause a massive crisis. It's going to hit us like a ton of bricks in the middle of all this bullshit we're dealing with already. So it is crazy. So where are we? Hedges, right. So what's the best hedges? I still like this one. This STS right here. And by the way, we should have maybe sold more of these. If we sold more of these, this would be even. Right? Because here it's down, this is up 30, this is down 45. If we had 50% more, this would be up 45 and this would be down 45, and this wouldn't have gone anywhere. We were aggressive. Is that a normal cheer? My daughter cheers that. She'll be aggressive, be aggressive. That's like their school thing. I don't know if everybody does that. It just made me think of it. This is a really good hedge, and it's still the same really good hedge. It was $2 here, right? And now it's still $2 basically. So this is a perfectly good hedge. Why is it a good hedge? Well, it's $2.40 in the money, and it's a $2 spread. Or it's about almost a $2.40 spread. But it's $2 in the money. It's $2.40 in the money. It costs $0. You have no additional cost, no premium cost on this spread. And meanwhile, you're 100% in the money on your $2.40. Therefore, every penny the SDS climbs belongs to you. And SDS is a 2 times ETF. And you know that's the thing, because everything that's left in our portfolio is the best thing you can have. All right, not to brag, but we've eliminated all the bad things. We've just gone through a massive crisis. We have taken away every single thing that we didn't think was working. And we are only left with the things that we think are amazing. And that includes the most amazing hedges and the most amazing longs. That's what our portfolio is full of. We aren't seeing a lot of new stuff we want to play, but we are seeing, every time we look at our old stuff, we're like, oh, that's a good hedge. So what happened in March? Well, SDS went from 25 to 40. It went up, well, not saying it's 25, is it? But let's say, I mean, it didn't really double, but let's say it almost doubled. So the market fell 25%, and this went up 50%, more than 50%, like it's supposed to, because it's a 2 times ETF. So if we drop 20% now, we're not starting at the same base, but let's say this goes up. It's a 2 times ETF. We drop 20% on the S&P. So this will go up 40%. How much is that? It's going to be 17.4 times 1.4, 2436. So that's our target. How much money will you make at 2436? Well, you're going to make the entire extra $7. Okay, so how much is this hedge going to pay us? If you make $7 more, you're times 300. Well, you don't obviously you don't have to do that amount. You have to portion it to your portfolio. But this spread will make $210,000. That's a lot of money. So that's what this hedge is for us. It's $210,000. We aren't fully covered here. We sacrificed $15,000. Why did we sacrifice 15? Why didn't we fully cover? Because we could have saved ourselves $15,000. Because since June 4th, right, I've been happy. It's only 2 months. So since June 4th, I have been happy. It's worth $15,000 to me to have a peace of mind that if we have a spike, I'm going to be able to quickly cash out 100 of these and recoup some of our money. There's value to that too. If we do have a 5% drop and this goes up 10% and it's $1.70, it's going to gain $17,000 on 100 of these positions at least. So there's where we're going to recover our money, and we'll be able to take it off the table. If we have the spread, we can't take it off the table. It would just stay the same. We'd be neutral, but it'd be the same neutral. That's not really doing us any good. I'd rather take some off the table and leave a lower cost basis. So if that's not confusing, I hope. So that's a fantastic spread right there. TQQ, same thing, except at this point we could probably roll the TQQ, but look at it. Look where we are. Minus 26, up 23. That's a great hedge. It didn't cost us very much money, yet TQQ is a 3 times ETF. So if the S&P drops 20%, this is going to lose 60%. 60%. So in other words, 117 times 0.4, it's losing 60%, is 46, below our target. And this spread would suddenly be worth at 46. It'll be worth the full, basically the full $45. So 45 times 50, $225,000. What's it currently worth? $50,000. So how much is it going to gain? $175,000. This hedge gains $175,000 if the Nasdaq drops 20%. Now, it won't gain it automatically because it has to stay down between now and January, but you'll get some good portion of $175,000. So we get paid $200,000 here, we get paid $175,000 here. That's $375,000. Then we've got the CMGs will make a lot of money. The Teslas will make a lot of money in theory. The SQQs will make a lot of money. We're going to get $500,000 plus in protection off this portfolio. Probably more than that. And the whole long-term portfolio is $900,000. So it could fall 50% and we're still fine. And it could fall 50% because we were down 50%. We're down 40-something% at the lows in March. We probably won't go that low again. We'll probably go closer to, like I said, down 20% from here. But here is higher than we were in March. And 20% is less than we fell in March. So we should be okay. So we have the tools to ride it out. But that's because we're doing the math and we're staying balanced. And what are we not doing? We're not trading. We are balanced. We are well balanced. We are safe. We are the captain of the Titanic who goes, "Oh, icebergs! I better stay on this very safe path and not go between the icebergs." That's what we're doing. We're saying, you know what? I see icebergs. Why don't we just steer away from that? That is not the decision the Titanic made for whatever reason. But when you know there are icebergs, don't go that way. That seems to be a very simple concept. And then to this day, I don't understand why they don't have like a boat that goes ahead of the thing or some, I don't know. I mean, it's the whole thing is baffling to me. But again, that's what I am. I'm the little boat that goes ahead of the thing for you and says iceberg. Okay, this is an iceberg. Way to go. That's an iceberg. This is not good. I don't know what I can do to point that out other than yell iceberg. You can say, oh, I don't know, doesn't look that bad. No, I don't see a problem. No, stay the course. I don't know, look, everything's fine. But it's like it's still there. It's not going away. It's getting worse. It's crazy. It is really crazy that we have to even have this discussion. So either be well hedged or don't play. And if you don't think you're good at hedging, if that's not working out, or you have trouble balancing your portfolio, don't play. Stop. I know there's nothing else to do during the virus. Just scale your portfolio back and gamble on something. Just bet on some things that are worth betting on, for the long run. But don't like gamble and try to hedge like millions of dollars if you're not really good at it, because that's crazy. If this gets worse, and if it respreads around the world and everything turns red like this, we're going to be in a global depression, not a recession, a depression. There will be worldwide hundreds of millions of people out of work. We already have 30 million people out of work in this country. There'll be hundreds of millions of people out of work. 1/3 of Americans did not pay rent last month. 1/3 no rent. There you go. 1/3 an error occurred. Well, that is an error. Nearly 1/3 of tenants did not pay rent. Not mortgages, rent. Okay. According to the National Multifamily Council, real estate, blah, 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 nearly 1/3 of apartment renters in the US did not pay their rents, and that says the first week of April. I know it's been continuing since. This month, see? Well, that's April. Oh, I just heard it. Anyway, believe me, it's here. So 1/3 of the people are not paying their rent. You don't think that's a catastrophe? You think we're just going to go normally along when 1/3 of the tenants in the building aren't paying their rent? I had a building. I had commercial real estate during the market crash in 2008. I got killed. You know why I got killed? The tenants didn't pay their rent. The building was full. Doesn't matter if it's full if people don't pay you. And we were nice. We were like, okay, you struggle, it's like you're struggling, blah, 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 blah. But then 60 days later, they're gone. They're not just not paying their rent. They're gone. They're not there anymore. You lost your tenant. They didn't pay their rent for 2 months. You have to replace them with another tenant. You have to pay a realtor to get to put somebody in there. You're not going to get the same prices you got for the guy before. You can't go after him. There's no point because his business is dead. That costs you, when you're a commercial landlord, that costs you a fortune, shit like that. So, there's a cascading failure, right? And then, I was fine. It wasn't devastating, but it was just, it was bad. But I could see how if you're a regular, most people have apartments, that's like their whole business, right? It wasn't my whole business, so it wasn't a big deal. It's just like, that freaking building's costing me money. But a lot of people, I knew a lot of people, obviously, who were also commercial real estate and stuff, and a lot of people, they were just getting killed, and that was their whole livelihood. They made their salaries off of those buildings. So there's not only no salary, but you have negative costs, and people are having to force to sell their buildings, and they're losing their livelihoods and this thing that they've built up their whole lives. A lot of people, they buy commercial real estate, right? They take care of it, and that's their entire plan in life, is to pay off this building and retire. And these guys are, guys like 20 years into a 30, not a 30, but probably 15, but you're 10 years into a 15-year mortgage on your building, and all of a sudden you hit an economic crisis, and suddenly you can't afford to keep going, and you don't have the money to pay the bank forecloses, you're forced to sell the building at a loss, or to just get out even on the building after 15 years when that was your savings plan. Paying off that building in 5 years was your plan to retire. You would own the building outright, but all of a sudden the money tightens up. The bank is going to take it. You're just lucky to get out without having to come out, having to take money out of pocket. And now you got nothing. This building you plan on being your retirement is gone. So it's not just poor people who get screwed. It's not just the businesses that go bankrupt. It's not just the workers who lose their jobs in the building. It's the landlords too. These are middle class, upper middle class people. They can go suddenly have nothing. Their whole retirement plans are shot to hell in one swoop. And that goes for apartment buildings. That goes for all kinds of people. All right, my building just sent out a renewal thing for rents. They wanted less money. I was like, oh, they said, hey, renew for 18 months and we'll give you less money. Because there's something very valuable right now about a tenant who can pay their bills. So, there's a lot of repercussions that we're not really feeling yet. But 1/3 of the people didn't pay their rent, and they got stimulus checks with 2,400 bonuses a month from unemployment. Plus, they got $1,200 at one shot like a month ago, and they still can't pay their rent. What's going to happen when they don't have that? Is that going to get better or worse? It's like an eye doctor, right? Better, worse, better, worse. Put your hand over your eye. Think about it. This is not good. No bueno. So again, when you're thinking of these positions, like, yeah, so this is a great hedge. This is a great hedge. This is a great hedge. And this one's more aggressive too. This is pretty aggressive. But we have the fives again. We're in the money. It's a 5.15 spread. You're at 6. Now, realistically, if SQQ, if we drop 20%, this only goes up 60%. It's only going to go up to like $3 to $9. Never going to get to 15. So this is actually not as good of a hedge anymore, because it's just because the SQQ has dropped so far that it's hard to recover. But at least we're in the money. It's a net $3 spread. And actually, now I'm sorry, it was a $3 spread. Now it's only a $1 spread. It's a $1.20 spread. That's a $1.20 in the money. So it's like the other one. This is a good spread now. It wasn't a good spread for us overall though, because we're down like $36,000 on it. $37,000. 36. All right. So we're down $36,000. But that's the cost of insurance. I don't mind that since May we spent $36,000 on a hedge that could have paid, will not pay, but could have paid at the time, 200 times 10, $200,000. We only bought the hedge for $50,000. It was a $200,000 hedge. So far, we spent $50,000. We're down $36,000. Whatever. That's the cost of insuring our portfolio that has grown tremendously over that period of time on the long-term side. Insurance costs money. It's not free. But that's the point. If we don't know what the market's going to do, and we don't know that we're protected well enough, and we don't know that we're going to recover when it drops again, what the frick are we doing? You've got to pay the insurance. You can't be in this market without the insurance. So therefore, if the insurance gets really expensive and it's chewing up all of our profits in the long-term portfolio, what is the point? Sure, the long-term portfolio can go up, but if the long-term portfolio goes up and the short-term portfolio goes down and they stay even, then what's the point? Why am I risking it at all if I'm not going to make any money? It's just not the kind of market that we're going to make a lot of money in. Therefore, it doesn't make that much sense to keep playing. So what's the best hedge? Cash. Don't play. That's the best hedge. Let's see. Jason, do you have any, how to set up Thinkorswim? Okay, let's do this real quickly. Look, it's 3 o'clock already, guys. Wow. Not these charts. That's not what you're talking about. You're talking about my main charts. This is a study called Pivot Points. If you right-click on the thing, it brings up this thing. And then it's a style study. It's a study, and you say add a study, and it's a trend study. And look how many studies there are. It's so crazy. So you go to the P's and see pivot points. That's the study. It's called Pivot Points. That's how you put that on there. And you're allowed to change the parameters, but I never do because, frankly, when TA only works because a bunch of idiots follow TA and they think it means something. So if you change the TA, it doesn't do you any good. You have to go with the standard TA that everybody's following, and that way you know what the people are following. That's what the TA is for. You know, these pivot points are useful, but the reason they're useful is because so many people pay attention to them that they become a self-fulfilling prophecy. Doesn't mean they're accurate, doesn't mean they mean anything, just means that's how it works. Ah, can't believe I lost my money on my Russell. No, I didn't lose my money. How could I have not lost money? I thought we entered a lot lower. Oh, well, let's get out there. No takers? Neither one filled. I don't like it. Hello? How obnoxious. I thought I lost money on that. I didn't realize. Look, while I was talking, we could have made all this money. Spiked down. We didn't catch it. Oh, come on. One of these has to fill. Ah, annoying. I'm going to kill that one. No, wait, I can't kill that one. Okay, I'm just going to leave that one. Hopefully it'll fill. So I hope that was clear. You just right click. If I want to do it here, watch. See, study. Oh, there it goes. See, always ask for what you want. Don't chase. Quick study, trend study, pivot points. See, ta-da. See how that works? That's it. Very easy. Let's see this question. Should we be looking at COS in EU and move away from the US? Oh, should we be looking at companies in the EU? I'm trying to figure out what you're saying. The Bernie said, should we be looking at companies in the EU and move away from the US companies, and if so, which ones? Or is there way too much Fed help here? Yeah, I don't think we're not there yet. I'm not abandoning the United States. I mean, there's plenty of good companies. There's plenty of global companies to play. If I want to play the EU, you play Starbucks, you play Nike, you play, things that are just universal and everywhere. Play Coca-Cola. I mean, I guarantee Coca-Cola is like, the US is probably not much of Coca-Cola's revenues. Let's take a look. Be interesting. Yeah, 1/3. So North America is only 1/3 of Coca-Cola's total revenues. That's how you play Europe. That's how you play the rest of the world. Then you go to Starbucks, Netflix. Most of their growth is outside the U.S. I'm not gonna start playing. Oh, well, that doesn't really tell you. That's interesting. Look at that, licensed stores. That's interesting. It's funny how they like randomly decide what's important in the company. Like in Coca-Cola, they tell you what country, and for Starbucks, they tell you what kind of stores. Company stores, 55%. Licensed stores, 32.7%. Look at that, 11.8% food service. Think about that. That's all of their profits, really. I mean, it's obviously not this particular profit, but all the equivalent of all of their profits are coming from food services. That's all that food stuff they added has been very successful for them. And I get it. You know what? When I'm in New York and I want a cheap lunch, I do get those Starbucks like snack pack things that have like some grapes and some carrots and whatever. I like that. Then you sit down on a corner somewhere and eat it and watch people go by. It's nice. Anyway, so licensed stores, 32.7%. So I guess that's like when you're in Barnes & Noble, not that anybody's in Barnes & Noble anymore, but when you're in Barnes & Noble and they have a little Starbucks shop, I think that's what those licensed stores are. I don't think they have franchises as far as I know. It's interesting. Anyway, you just got to use your head and pick the companies that do business in Europe. I playing the EU market when, that it's just way too confusing for people. So I mean, there are certainly companies like Deutsche Bank. If you want to play something, DB has always been in trouble, right? $9. Holy crap. Deutsche Bank. Okay, let's guess what the categories are. I'm turning away. So let me see. I would say it's got to be bribery, corruption. What else? What else? There's bribery, corruption. Black. Oh, what do you call it? Money laundering. What else do they have? Oh, yeah. These are just different words for the same thing. That's like Deutsche Bank's revenue stream. Oh my God. At least they're diversified. All right, so that's, I mean, so you just got to pick something that's a good company to bet on for times of crisis. And yeah, I mean, don't forget, by the way, another reason we haven't closed down officially yet is because next week is the Fed. And also, I can't believe that they're going to let these insurance things expire, although it seems to be happening. But if they don't let it expire and the Fed steps in to do something else and blah, 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 we could still get one more little boost before we're out. But if we have another rally, I'm out. I'm telling you right now, we get another 10 big climb rally, I'm out and I'm going to ride the freaking short-term portfolio until it comes back. And we've done that before. That's what we did in 2008 when we had a pop. We got out on the pop and then it came right back down. And then in March of 2009 is when we went back in. We had a basically empty portfolio in March of 2009, and I called in one day. On March 9th, 2009, it was on TV. I called 13 long positions to add to our portfolios. I was on a TV show live with Tim Sykes, a penny stock trader. He had a TV show called Live Stock, I think it was called. And I was supposed to be on the show for like an hour at 1 o'clock. And I was on the show, but when during that day, as I was driving to the studio, I forgot why, but the market completely collapsed that day. And was down it was down like 1,500 points, but 1,500 points back then was, it was S&P 666, and I guess the S&P must have been down like 150 points. So, it lost, 15% in one day, basically. And we were on TV while it was happening, and I'm just sitting there telling people the same crap I always tell you guys with value. I'm like, oh my God, Citibank is $5. How can you not buy Citibank for $5? How can you not buy Ford for $2.50? It's like I was just sitting there picking out stocks, going, holy shit! I'm like, the world is not ending. McDonald's is $14. Buy McDonald's, buy Coca-Cola, buy Apple. It was so insane, and I just kept calling out these trades, and I stayed on for 3 hours until the bell would hit. And we were exhausted, but we had the best fun. And it's such a shame. I don't know where that clip is anymore. It's like they took it down. I don't know if we ever got a copy, but it was such a fun show. We had such a good time. But yeah, it was so obvious to me that it was a complete overreaction. It was based on something that didn't, some stimulus or some money didn't happen, and everybody's freaking out. And I'm like, they're not going to leave it like this. It's going to come back. And not only that, but we're not going to be cavemen. The S&P was at 666, down from, I don't know what it was down from. It was down from something much higher, though, like 1,500. So it was down like 50%. And I wrote this article once, and I explained, like, look, the whole world economy, the people, we the first world people, there's only a couple of billion of us. There's 6 billion people who are third world people. And so they're the woman taking a jug of water on her head to the river and carrying it back and then doing the laundry with stones and shit like that. That's how most of the world still lives, like that. Okay, I mean, it's obviously a little better than that, but basically most people are like subsistence farmers in the world still. They have real basic jobs in real basic villages that haven't changed much since like medieval times. And that's like most of the world. They have very low incomes. They might have a car, they might have a this or that, but I mean, they're living very, very basic lives. And none of this affects them. They don't give a crap how much IBM is selling this month. They don't care about Apple. They don't care about iPhones. They don't, people are starting to have phones in third world countries, but still a lot of people live normal, basic lives. And that's the basic world economy. So if our entire economy collapses and we go down to their level, you're still going to have 50% of the world's GDP intact. Because carrying water to the river creates a GDP points. scrubbing the laundry with stones creates GDP points. Putting seeds in the ground one by one by one and planting them and hoeing them with your own, with your own hands, that creates GDP points. People have to eat, they have to breathe, they have to have clothes, they need water, they need to go to the bathroom. There's some basic stuff. They want some wood to put over their heads so when it rains. These things happen no matter what. And you know what? If the entire economy completely collapsed and you woke up tomorrow and we were in a devastated scene that looked like the end of like Terminator or something like that, you would still get up and look for a job and try to make some money so that you could have Netflix and you could go to work and you could have an air conditioner. You would be motivated to do all those things. And that's how the economy would rebuild. So the global economy is not going to drop 50%. And if it does drop 50% or the market drops 50%, it's a mistake. It's a misreading of the situation. And that's fundamentals. There are global fundamentals, there are macro fundamentals, and you have to pay attention to these things. So that's where we are there. And then Bernie said, should we look at, all right, so we talked about the EU. Is oil at 42 a short? It probably is a short, but it's kind of wacky the way it's performing. So I don't think I'd want to jump on it. 42.50 though, 42.50 I would short. See this nice red line? That I would short. 42, it's too tough to call. It doesn't have clear resistance. Jason says, thank you for taking my question. I didn't take your question yet. You don't know what I'm going to do. Could you point me to where you keep the info on how to set up Thinkorswim? The info see here is support chat. That's how you get the info. I feel like I've looked everywhere on your site. I don't have that info. That's why the only thing I do is tell someone to do this. Oh, I'm sorry. You asked the Thinkorswim question before. Yeah, I mean, I have no idea what I'm doing. I'm a player. Like I never read the instructions. I just play with something until I figure it out. So, I noticed this one time when I accidentally right-clicked on it. I said, "Ooh, what are all these things?" And I started playing with the charts. The only thing I like, though, is that. That's the only thing, out of all the things they let you do on the chart, that's the only thing I like. But these guys are great. They have the best support. I've called them sometimes, and they have fantastic support on this line. John says, just tuned in. Really, just now? That's scary. Have you talked about gold and harmony yet? No, I've not. So there you go. Have a nice day, everybody. I mean, gold is, we're getting stretched on these things, but so far there's been no indication that it's reversing. As we know, GOLD is my stock of the year, so no surprise here that it's way up like this. We pick our stock of the year in November, and the stock of the year is a trade most likely to make 300%. Now, most likely to make 300% doesn't mean it's going to go up 3 times. It means that in an option spread, we pick an option spread that's going to make at least 300%, and we set that up. And I say this spread is the most likely thing I think is going to make 300% for the next 12 months. That's what the stock of the year is. In this case, it was here in November. So this year was gold, because the spread was attractive, and I couldn't see I didn't see any possible way this was going to happen. I was shocked when that happened, but when it did happen, we actually doubled down. But I was like, there's no way. Gold's so undervalued here. Not gold, the stock. I mean, gold itself, the material. So I said gold. We're not looking at the same. So here we were in November. So gold was 1450, and I was like, gold is very, very undervalued here. And as you can see, gold only went back to 1450, and the stock itself went lower. But again, that was stupid, right? Because the stock went much lower than the actual gold did. And meanwhile, what does the stock do? They're gold miners. That's what they do. They mine gold and sell it. So it's pretty easy to see they're going to make a freaking fortune mining. They got the same mine, the same miners, the same work, the same everything else. Yet the gold is now 20% more than it was last year. About 20% more than it was last year. So they're going to make a lot more money. And of course, 20% more isn't just 20% more profit. Their profit was only 10%, but now they're going to have 2 times, 3 times more profit, because it's all profit once you get above a certain level. So that's great for them. That's great for these guys. Confusing because they're gold and you're talking about gold. That's great for these guys. That's great for Harmony, which was my second favorite miner, also doing well. And also Stretch, though. And then NAK, of course, is my favorite gamble, which my kids have. And that just tapped out at 250. So that's very nice also. So yes, the whole concept of gold was too low last year. That's why I made GOLD, because they're my favorite miner, the stock of the year. But all these miners have been good plays. And actually, not last year, but 2 years ago or 3 years ago, Wheaton Precious Metals, it was silver Wheaton at the time, WPM was my stock of the year, because I thought silver was incredibly undervalued. And so, I mean, and it was, and silver Wheaton hit our goals and made the money. And now the stock of the year is gold. So, you know, for very similar reasons, we picked those two a couple of years apart, but it's because the metals market had been unduly weak. The dollar had been extremely strong, and those days are over because of the complete disaster of the administration. The policies, everything Trump has done, the weakening of the dollar, the weakening of the economy, the destruction of the Republican Party. This is all stuff that's, you know, causing a big change. There's times of uncertainty. People are stockpiling gold. Stormtroopers are running up and down the streets now and throwing people into unmarked cars. It's the kind of time you might want to have some gold, right? Anyway, on that note, enjoy your weekend. Have fun. I'm going to go back to my cave and go back into isolation before I start coughing again. And we will do this again next week. And I'm sorry about the early technical delays, but things seem to pick up since then. All right, so have a good day, everybody. Talk to you later.